Welcome back to the channel, everyone. My name is Is-Rael. I'm a lead developer here at Nonstop Algo, and in this video, I'm going to give you my top 3 reasons why people lose money trading cryptocurrencies, stocks, and Forex. Before I get into that, did you know that 70 to 90% of traders lose money when they're trading in the foreign exchange markets versus 95 to 97% of traders entering the stocks and crypto markets? Comment on why you think that's the case. Make sure to like and subscribe if you enjoy this type of content, and let's get started. My first reason why people lose money trading cryptocurrencies, stocks, and Forex is because they are short-term focused instead of being long-term oriented. When investors enter any of these markets, they should have a long time horizon planned. They should be thinking into the future, a year into advance, or how far they can stretch their initial amount of capital they plan to invest. They shouldn't be looking to buy all in into one stock. They should plan out how they're going to spend their money over a long period of time instead of being focused on making large gains in short amount of time with huge risks. I don't want to discourage you or take away from the value that can be found in short-term investing, especially if there's research, backtest, and methods backing up these trades, especially with results. So for all the short-term traders out there, that 5% of you, whether you're a hedge fund or a retail trader, there is markets and I guess money to be made. We see it all the time when stocks jump up 90% or exorbitant amounts in short periods of time. I'm just informing traders of the 95% community should try to take on a long-term approach rather than a short one and see how this fares in your portfolio. And this brings me to my next point, which is if you're short-term focused instead of having a long time horizon planned out, you can end up taking an unnecessary amount of trades. You're shooting yourself in the foot instead of putting yourself off on the best path to success. If you only have $100 in your portfolio and you spend all of it in a single day, what are you going to do tomorrow when the price drops? You're not going to have any money to buy back in. This is why you need to spread out your trades over a long period of time and only take ones that are necessary, knowing that it's going to cost some of your portfolio, and you just have to learn how to allocate. My last point to my first reason as to why people lose money trading cryptocurrencies, stocks, and Forex, running out of money too early while the market is still moving down is one of the worst positions you can be in, because as the market continues to drop and you already have an existing holding of crypto, Forex, or stocks, but you have no more buying power, what are you going to do? You can try to short sell, and that's a concept we can talk about another day. I would argue instead of putting your entire 100% portfolio's worth into a single or multiple assets, it would be much better to allocate X amount over a long period of time so that that 100% is planned out how it's going to be spent rather than in a single trading session or short-term mindset. Moving to my second reason why people lose money trading cryptocurrencies, stocks, and Forex. Traders neglect to take into account risk, take profit, and stop loss. Now let's talk about risk briefly. You cannot allocate 100% of your portfolio in a single trade, as we just mentioned. If you did, you would be extremely exposed to risk. You wouldn't have any money left to buy if the market were to go down. You need to mitigate that risk. Maybe instead you only spend 10% of your portfolio at the current period of time. You see if it goes up, you sell, you make some money, and if it goes down, this is where we set a stop loss. That way, the stop loss takes you out of the market. You have a defined amount of risk, amount of money you're willing to lose. You can't lose anything beyond this amount. It's set in stone. Talk about taking profit. If you have an account that has gone up in value since when you first bought into it and you haven't taken any profit on fear that it's going to continue to rise and you're going to miss out on money you could have made if you would have just kept your holdings and never would have sold, I understand that mindset, but you should always be selling your portfolio. That way you're recouping some reward over time, and then you can buy back into it if the price starts to go up again, and if it crashes, then you have more money to buy in at that point too. Now that you know how to take into account risk, take profit, and stop losses, make sure that you apply these in the same manner of not overexposing your 100% allocation to a single trade. Make sure there's a logical risk to reward scenario that you are playing out in your head of how this trade could go. Make sure to take those profits when the price goes up and not to sit on your hands about it, and make sure you Do not fail to step away from trades when your stop loss triggers. When you're manually trading, it's really emotionally driven. It's hard to manually take yourself out of a trade. It's better to have that set up ahead of time. That way you can take that emotion, that heat of the moment, out of the moment. Bringing me to my last point as to why people lose money in the cryptocurrencies, stocks, and foreign exchange markets. They are not utilizing a trading bot. Now, trading bots are awesome and they help simplify the first two problems in why people lose money in these types of markets, because you can configure a trading bot to be long-term focused, taking that emotion out of the trade. On top of this, you can define your bot's strategy to take into account your level of risk to reward. You can add stop losses, you can add take profits, and when these price levels of all these assets that you're trading occur, when you're sleeping, when you're at work, out at the gym, the bot's going to automatically do these things for you. It's going to manage your trades, taking out the hard part of trading for you. Now you just have to figure out, which is my third point, on the third point, how you can free up your capabilities by offloading the risk, take profits, the manual trading, the short term, go to a long-term time horizon, add that to the bot, and learn how to analyze and react to the entire market versus a single trade. And when you can learn how to think in this global scope of, I want to manage my portfolio, not just a single trade, now you can start applying your strategies and your methodology of take profits, stop losses, have a good risk to reward, learn how to make money over time instead of just in a short time frame. Apply these to all your existing holdings. And this gets me to my last point, which is a bonus point. Orchestration. I want you to think of orchestration and the management of your portfolios like an orchestra. You got people playing the violin, the cello, some flute or trumpet instrument. It's wonderful, right? And they're all working together in sync, playing their different piece that completes the symphony. And that's what you're going to learn how to do in setting up trading bots to manage your accounts, portfolios, whatever, in a non-financial advice way from Nonstop Algo here on this channel. And we look forward to continue to make these videos and teach you all about algorithmic trading. Make sure you leave a like, comment, and subscribe to the video. And if you want to see our bots, check out our Discord, leave us a comment or support ticket there. We'd be happy to help you get set up. $4 a month can't be beat. And we'll have more videos showcasing why this is the case. All right, everybody, take care.